Japan has been the fastest growing G7 economy so far this year. Indeed, Prime Minister Abe said the country has emerged from the crossroads of economic stagnation. But this all seems perhaps ironic given the Bank of Japan's intention to double its monetary base by 2014. Joining me down the line to share his views on the matter is Sebastien Galy. So Sebastien, Shinzo Abe made a much-awaited decision to raise the 5% sales tax to 8% in April next year, a move which Kuroda gave backing to in a subsequent press conference. Despite the so-called success of Abenomics, some analysts still believe bringing down the corporate tax and implementation of privatisation would be vastly beneficial to the Japanese economy, given the fact the majority of Japan's gross government debt is actually debt between large government agencies. Do you agree there is still work to be done?
Unfortunately, I think what they're still addressing are essentially some of the less difficult issues. So if you look at what Abe has achieved is absolutely tremendous. In a sense, he's managed to turn around an entire economy and do it before China essentially started this a significant slowdown. And therefore, it was actually really the right time to do it. So I think people underestimate how much has been achieved. The thing is, easier to weaken your currency and convince the market to do so and expand your balance sheet and the likes than it is to address more structural, and deeper reforms. So the VAT tax increase on the consumer side is seen as necessary by many of the fiscal hawks for many years because they believe that the debt trajectory is not sustainable as it is now. It's partly sustainable simply because rates are ultra low and the BOJ is kind of printing money. But they believe it's unsustainable because the government is simply not generating enough revenues. Maybe, well, the case and probably what's going to happen with the introduction of that tax is simply an acceleration in consumption, which will then basically create a negative hit on afterwards. What we do know from these examples, for example, in Germany, when they did introduce these VAT taxes, is the effect is very difficult to measure generally as long as the VAT tax increase is not enormous. And they do see some, rise in activity and then some potential fall in activity, but that tends to be washed out by other phenomena. So probably people are getting slightly overexcited. What they shouldn't be underexcited about is more of these structural issues. So corporate tax rates, from my point of view, is interesting. It's very nice, but it doesn't really address the fundamental problem. So the way Japan is looking at it is they are trying to encourage investors to invest more in equities, take more risk. They're heavily long in fixed income. They're not enough invested in equities. And as they invest more in equities, they get more involved in the equity side, it will be a boost to assets for asset holders and probably will lead to some form of some kind of reform in the case of Japan, and it probably also will weaken the yen as they invest more outside of Japan. The problem with this is they're not addressing the core issues. In as much as the labor pool in Japan has been very stagnant to risk and essentially is deflated when faced with shocks such as the yen, the corporate sector needs deep reforms. These reforms have been very, very slow. And the reason why many investors in Japan are not that invested in Japanese equities and why for decades foreign investors were underinvested in Japanese equities is because of some of the governance issues, some of the lack of reform or basically the lack of innovation from a management point of view over there. Now, they are highly innovative on the product side. They do things very well in many, many dimensions, but they do have fairly significant issues which have been on and on for decades, and that's just one part of the broader issues in the case of Japan. So what they're doing is basically peeling off the onion and removing the easier layers and quite courage and a tremendous achievement on the back of that. And as they peel these onions, it becomes increasingly difficult to achieve what they need to achieve, which is really essentially more plastic labor for labor in the case of Japan, but mostly also management changing as a culture, and very, very likely they need to open immigration or they need to significantly encourage Japanese to have kids, because at this point in time it's looking fairly dramatic.
Kuroda also urged the US deadlocked politicians to resolve the budget impasse. He said central banks in general have the ability to respond to any kind of problem at any time, but he gave little away on what emergency steps he currently has in mind. What tools could Japan deploy here? How many arrows could there be to Abenomics?
The easy quarrel, the one which is replenished very easily, is simply to intervene in the FX market through verbal interventions and then through physical interventions. Japan is known to intervene directly, officially, and unofficially through different agents. And so these kind of interventions probably might still be happening at this point in time, but they can go in a more hardcore version and basically try to intervene and stabilize the value of the yen relative to the dollar. Dollar yen matters because it matters to the psychology of the Japanese investors and Japanese consumers. They're very fixated on it, even though its economic meaning has changed significantly over time. And as they control that dollar yen, and as well potentially if they need to, they inject money in the equity market, that helps basically to stabilize assets in Japan. And since Japan is relying on this wealth effect of rising assets to boost consumption and to boost export and production in the case of Japan, it's probably a very sensible approach if they need to. So I think the hidden quiver is not really that hidden. It's basically they're just going to be very aggressive on the FX side if they need to be. It's generally far more efficient to speak than it is to intervene in the market, and so they'll adopt the cheapest type of intervention policy that is feasible. They won't do it unless it's really a pressing issue, because of course there are broader issues than the level of the exchange rates, strategic relationships with the U.S. and the rest of G10 and the likes. But we've seen in general that their relationship internationally has been frayed significantly, as every agent or country essentially is looking mostly for its own goods. And right now we have the U.S. having a tit-for-tat politically, which has repercussions around the world, and of course makes the Japanese with their heavy dollar debt very worried. And of course their main concern in the U.S. is a political concern, which is purely domestic. And I think these domestic concerns are to some extent having more importance than external ones, which is something you see, unfortunately, in times of tension. So the Japanese will do what's in their own interest, ultimately. They're generally very reluctant to do so, but they will probably without hesitation, and they've already warned essentially the Americans that they will do so by coming out with such statements.
The uncertainty generated by the congressional stalemate has already caused the yen to rebound. Tokyo shares to drop and made the US economic outlook murkier. All spell trouble for the Bank of Japan's optimistic economic and price forecasts. After a steady knee-jerk reaction, markets appear to have become jittery. How concerned should the likes of Japan be here, and what is your outlook for the yen?
Well, we do think in the very short term there's some risk on the downside, since the yen has basically challenged its 100-day moving average. And if you look at the positioning of institutional investors, it's generally long euro yen. Not massively so, but significantly so. And retail investors are long dollar yen. So there's a risk of washout of these positions. Some of it has already happened, and the risk for is a deeper washout of these kind of positioning, and that will be triggered by some of the concerns in the U.S. If you think, many weeks or months down the road, you'll be in an environment where probably yields globally will be relatively low, where investors will be searching for yield, and people will be trying to discriminate between good and bad assets, even more than they were in the past, or certainly more than in the past few years. The outcome of that will be that people will look also for cheap funding currencies, and people supporting a cheap funding currency. And there, the yen as a short position will probably make a significant comeback. So the pressure we're seeing on the dollar yen will revert eventually, and quite significantly so, and probably will favor some of the commodity currencies such as Aussie, CAD, and the likes. Probably not necessarily in the short term, but the washout will just be an opportunity for people to build up their long positions at a lower level. It could be fairly nasty if it does really break out, because the positions are quite significant, but I guess in a low volume environment, nothing real is happening except some positioning squeezing, and there'll be a lot of bigger money just waiting to buy at cheap level.
Sebastien, thank you so much for your insights today. Well, viewers, the Dukascopy TV team will bring you every twist and turn of these ongoing negotiations, so please do keep clicking back to the website. Goodbye for now.